Today, we're answering your biggest tax questions. We're doing a quick and easy take covering what you need to know this year when you file, how to maximize your refunds, and set yourselves up with your finances for next year. Welcome to the Couple Money Podcast, where we talk about how spouses can get on the same page, pay down their debt faster, and get on the path to financial freedom. I'm your host, Elle Martinez. Today's episode is brought to you by the free course 5 Days to 5K. Many couples I talk to know what they should be doing, right? Pay down that debt, save money for emergencies or whatever goal they have. The tricky part, though, is where do you find the money for those goals? 5 Days to 5K is a free email-based course that helps you find, save, and earn extra money on the side so you can reach your goals faster. If you're interested, you can sign up at couplemoney.com/5K. Right now, there are some people in this world who are giddy just like those fans. And it's not because of a game. It's because it's tax season. Yeah, this is like the Super Bowl for some money nerds. And while I admit to being a number cruncher at times, I have to say, taxes really aren't that exciting to me. Yep, guilty as charged. However, I've seen how important getting our taxes done has been for our finances, both with planning throughout the year, as well as using our refunds to reach our financial goals faster. And I want you to see taxes in a better, maybe less stressful light. So today I'm going to tackle the big questions. Heads up, even though I enjoy covering personal finances, I'm not a tax expert. There will be plenty of resources in today's show notes for sure. But this episode, I will do my best to break things down and talk like a normal, non-money nerd. In this episode, we'll discuss the difference between tax deductions and credits, the major difference we notice with the new tax law when we filed our taxes, and how to make the most out of your refund. Let's get started. All right, the first question is a big tax refund a good thing or a bad thing? Many personal finance journalists and writers have very strong and opposing opinions on them. For me personally, I see this in two parts, the refund itself and then the size of it. So let's look at this. Let's start off with why getting a big tax refund is a win. Having a large amount at once can be psychologically empowering. If you have credit card debt, for example, having a couple grand to use may push you to just go ahead and get rid of that debt, or at least lower it considerably. And also depending on your work situation, whether you're self-employed or have a regular income, you might choose to be more conservative with your withholdings so that you get a refund rather than getting hit with a payment. Being self-employed, my income varies year to year and can fluctuate during seasons. I prefer playing it safe with my estimated taxes. It might not be the solution for you, but it works for us. Now, getting a big refund though, I'm not really excited about that, and here's why. The other side of the argument when you talk about tax refunds is that it's basically an interest-free loan to the government. A refund is simply you overpaying what you owe and then waiting for about a year to get it back. Now, no one's going to care about your personal finances as you do, so having the money to spend as is available is a practical solution. If you automate your finances, having more money in your paychecks can allow you to pay down your debts or save up faster. So while I don't think you should feel guilty about getting a big refund, I do think it's smart to review and update your withholdings so that your paychecks are bigger throughout the year. Second question, how do tax credits and deductions work? I mean, we hear both of them. They're always kind of associated with getting a bigger refund. And depending on your circumstances, you're going to qualify for various tax credits and deductions. But there's some subtle differences that you need to know that's going to help you tremendously. Tax deductions reduce your taxable income, not the tax burden you owe, while tax credit lowers your tax bill. So what does that mean there? It means with your deductions, say if you make $65,000, if you have a tax deduction that lowers it by $10,000, $5,000, then your taxes are going to be based on that lower number. Now with tax credits, it's based on what you owe for taxes. And there's two types of tax credits. There's non-refundable and refundable. And I'm trying to keep this simple. So say you owe, throughout the year, you owe $3,000 in taxes. If you had a refundable tax credit, what that means is if it is more, so you owe $3,000, but you add up all your refundable tax credit and it's $4,000, not only will it wipe away your tax bill, but you'll get that refund of $1,000. And as you probably figured out, with the non-refundable, even if it's more than what you owe, you don't get that money back. Now, I understand you're sitting down and you're filing your taxes this year, but a great time to take advantage of these credits and deductions is throughout the year. See what you qualify for based on filing your taxes this year and start setting things up now. For example, with contributing to retirement, your 401k, 457, or 401(b) allows you to invest while lowering your taxable incomes. And if you have kids, there are different tax credits that you can take advantage of, and also opportunities like the 529 to make sure that next year is even better than this year. What changes happened with this new tax law? Okay, there's no way I can cover all the tax changes in every scenario. It would be too long, complicated, and I'm pretty sure you'd switch podcasts in a heartbeat. However, I'm going to share what I noticed while we got our taxes done. The big news I've seen was the standard deduction has increased. For those married filing jointly, the standard deduction is now $24,000. And this is a big jump from 2017 standard deduction of $12,700. If you have kids, got some good news. The amount for the child tax credit per kid doubles from $1,000 to $2,000. And it's also extended to more families. Another bonus, $1,200 of the $2,000 tax credit is refundable. The new tax law did remove the personal exemption. What that was that when you were getting your taxes done, you would deduct that personal exemption for yourself and if you had any dependents on your tax returns. When you do your taxes, you do have a decision to make. Do you go for that standard deduction? Like I said, it's $24,000, or do you itemize? Itemizing does take more time because you're looking at each and every tax deduction and credit, but it can be a huge one. Remember, we're going to try to lower your taxable income and make sure we're maximizing any credits that you qualify for. So if you're using tax software like TurboTax, that's who we use, it's easy to run the numbers in both scenarios and take the better deduction. The last question we're looking at is, how can we make the most of our tax refund? This is a fantastic question because for many couples, this is kind of like their big windfall for the year, and you guys can have some major wins with this. So I want to give you 3 goals that you could use when planning your taxes, as well as a recommendation. The first one is create or build up your emergency fund. Things happen, guys. We have to be prepared for them. Now, you don't have to fully fund your emergency fund, but I do want to make sure that you have something substantial that's in savings. If you don't have an emergency fund up, you don't have really a financial cushion that you're comfortable with, and you're looking for an amount to shoot for, consider 1 month's worth of essential expenses. So we're looking at rent or mortgage, the groceries, utilities like light, and if you have a car, those related expenses. The reason is I want you to at least have a peace of mind knowing that you have 1 month's expenses covered should you hit a bump. And please do not keep it in checking. You're more than likely going to use it bit by bit. Instead, tuck it away in a high interest savings account where it can grow a bit, but still gives you easy access when you need to get it. And there's two kinds of places I want you to consider. There are online banks like CIT, Ally, Capital One 360, where you can earn significantly higher rates than your typical big banks with the brick and mortar places. Another fantastic option is your local credit union. Being here in Raleigh, we use Coastal and we've been happy with both the service and the interest rates we're getting. The reason credit unions can be a fantastic partner is how they're structured. A normal bank serves its shareholders. The profits get shifted their way. It's not good or bad, that's just the way it's set up. With credit unions, though, as a member of it, you are an owner. So one way profits get sent to you is in the form of higher interest rates on savings accounts. So if you guys aren't happy with your bank, you might want to consider making a switch, and using your tax refund to open a savings account can be a great first step. The second goal I want you to consider is knocking out high interest debt. Carrying around high interest debt like credit cards is like walking around in quicksand. You're going to get pulled down. Paying off those debts can not only give you some breathing room in your budget, it'll also help you get some peace of mind. Do what works for you, but I'm a big believer in the debt snowball method, which means you eliminate your debts based on the balance from smallest to largest. If you have a big enough refund, you can get rid of a couple of your small debts in one shot. The mental upside is that you removed a couple of your monthly bills, which now improves your cash flow, and you can roll that money towards paying off the rest of your debts. Finally, I want you to look at investing more for retirement. Did you max out your IRA contributions last year? Don't feel bad if you didn't. You can use some of your tax refund to make it happen this year. Opening or funding your account is a wonderful way to invest for retirement. And there are a lot of great options out there. If you're looking for some that I've seen and I recommend now on the site, M1 Finance, Vanguard, and Betterment. And between the two of you, you can contribute $11,000. $13,000 if you're 50 or older, depending on your taxable income. That's a huge win for your retirement. And the earlier you start contributing, the more compounding interest works in your favor. And my last recommendation isn't necessarily about your financial health. It's just about being balanced. I want to make sure that you guys sit down and talk about a percentage of your refund being used for something fun. It can be a vacation, it can be something for around the house, but I want it to be something that makes both of you happy. You've worked hard throughout the year. You should reward yourself. Just keep it in balance with your other goals. So I hope this helps you make the most out of your tax refund. Before we close up, I want to focus on some key takeaways so the two of you are winning with taxes. The first one is do some planning ahead of time. Don't wait till next year when you're filing your taxes again to try to scramble and get things done. Do it bit by bit throughout this year. See if there are opportunities for you to take advantage of any tax deductions or credits. For example, look at your contributions at work with your 401k or similar plans. Can you contribute more, even if it's a little bit? It's not only going to help you when you file your taxes, but give you guys a leg up with retirement. The second is go over your withholding. If you are getting a huge tax refund, dig in and see why. Perhaps you could adjust your withholding so that you have more in your paychecks throughout the year so you can hit your goals faster. Or maybe you do like to have a bigger refund, but understand what that means for your family. The third one is divvy up your refund to hit your goals. I want to make sure that you guys are paying down the debts, saving more, and yes, having fun. So before that refund hits your bank account, have a plan budgeted out. It will help you make the most out of it. And if you'd like to chat more about how you can maximize this year's refund or start taking steps to make next year even better, please join us in our free and private Facebook group over at Thriving Families. We're families looking to support and help one another out. We're over at couplemoney.com/FB. Hope to see you there. I know we covered quite a bit in this episode, so I will have the highlights and resources mentioned in the show notes over at Couple Money. I want you to not only have fewer stresses with taxes, but for you guys to get a leg up on next year's taxes. So please check out everything I have on the site. And since we're trying to go for some big wins, next week we're going to tackle how to manage and optimize a huge expense for many couples and families: health insurance. So if you haven't already, make sure you're subscribed. You don't want to miss out on that episode. We're on iTunes, Spotify, Stitcher, you name it. And if you want to share this episode with your friends, I would really appreciate it. I want to make taxes be just less of a headache for couples. You guys have a lot of important things to take care of. I just want to make sure that you guys have your finances squared away. Let's make money a way to connect as a team instead of being a wedge. Our theme song was written and performed by Gentle Regime. Additional music by Lee Rosevere. And finally, and most importantly, thank you so much for your support. I really appreciate it. And thank you for sending the emails. I hope you have a wonderful week. Take care.